Hello, welcome to Critical Line Item. My name's Tom Ravlick. Thank you for joining me for this particular podcast. One of the important areas in financial services over the past several decades has been self managed super funds. In short, a self managed fund is a fund that has under five people that are members of it. Uh, they then play within their own fund in terms of investments and strategies and whatever have you. It's an area of compliance that has caused a lot of heartaches for various people, and it's been regulated by the audit board and the ATO in the audit space, and by ASIC, the corporate regulator, in terms of investment and financial advice. Today, I've got the chief. Um, Busybody, if you like, the head of BGL Australia, um, Ron Lesh, whose products specialise in uh, superannuation, SMSFs, in order to talk to Ron about the sorts of things that matter in the SMSF space. Ron, thanks for joining me.
Oh, look, thank you for the invitation, Tom. It's been a long
Absolute.
time.
It's been a very long time. Now, there will be listeners who don't know where you've come from in terms of your professional career. What would your career look like if you had to sum it up on the back of an envelope?
That's reasonably easy. I started life as an accountant working for PKF, a chartered accounting firm. I qualified as a chartered accountant, worked for them overseas, and then left them in the mid 80s. Went into a small accounting firm where I became a partner. At 28, and then decided that the people I was in partnership with were not really the people I wanted to be in partnership with for the rest of my life. I left that, did a postgrad in IT, started to worked at another accounting firm where I was a senior manager and I had my own client portfolio. And at the same time worked on developing some software for, at the time, companies office compliance. We had all the state companies offices. So we wrote some software for that in 1991. ASIC came in, so we moved that national. I moved out of accounting into BGL, or what it was at the time, a consulting organization. We wrote the software package in 97. I wrote the super package, an investment package, and a general ledger, and we've sort of gone forward from there. Today we sit with well over 750,000 entities in the cloud, and both our corporate compliance and super products, and numbers growing every day, and we continue to survive through this COVID disaster.
It's interesting. The fact that you embraced IT reasonably early on, it had made a success of it. It's fascinating, Ron. How precisely did that begin for you?
Well, I was working in accounting, and I was working with a lot of clients that were putting in computer systems, and I wanted to know more about it. So I went back and did a postgrad. It was really as simple as that. And then I just found it much more interesting going forward. We learned how to program. I wrote the first product that we ended up selling as an assignment during as part of my course. So it sort of started there, but we've gone through many generations of IT from BGL. We started off in DOS. Those that remember DOS, we then moved to Windows, to networks, to cloud hosted, and then probably the last 7 or 8 years into pure cloud, where everything's hosted in the data center.
What are those different technological transformations have been fascinating to watch. Um, how comfortable have people been with the different elements of security, Ron? Because you go from the old school um, uh, sort of DOS systems, which you've mentioned, and go all the way through to the cloud. And each one demands something else of the user of a product in terms of understanding the different levels of security, the different elements of information safety, if you like. How does that all work out? with clients as they learn new stuff?
We spend a lot of money on security. I suppose what I've found and I think I've done all the way through my career is employ people who are smarter than me. So my head of IT and the guy who runs the platforms here has probably been with us, I think, 14 years. I think it was a couple of weeks ago.
Yep.
Very smart guy. He handles, we handle the security. We had to go through ISO, so we employed somebody to handle that. So we're ISO 27001 certified. So you sort of handle it. I think the environment that we're working in today, having stuff in the cloud, is probably a lot safer than a lot of people who are running desktop software, especially if that desktop software has some sort of cloud connection. And even if it doesn't, just running their own computers without the proper tools, the proper software installed is very dangerous, and probably far more dangerous than running a product in the cloud the way we do. Running in Amazon, we have a lot of inbuilt security in Amazon itself, but we also do a lot of penetration testing and all that sort of stuff, and have external consultants do that for us to certify us. So look, it's part of the role that we do. It doesn't faze me or worry me particularly. It's just something we do, something we insure against. And there's not much more you can do than that.
Yeah, it's interesting for people to understand what a software company like yours does
Mm.
in terms of security and developing the right element of, shall we say, uh, the right element of a safety online, if you like,
Yeah.
because not everyone is trained in that space. They may use products, but they're not all trained in that space.
Mm.
If we take a pivot, Ron, part of your passion, if you like, and I've read some of your blogs on this stuff, is the regulation of self-managed super funds, which of course it's an area in which you've got a product. What are some of the concerns you've got at the moment in the marketplace?
Look, I think there's a couple of areas that I have concerns around. We've written quite a bit about the ASIC flyer that came out last year that we've said is false and misleading, because the ASIC have basically manipulated the data to come up with the result that they wanted, which is not a real result and not a real reflection of the cost of running a self-managed super fund. So I certainly spend a lot of time having a go at them over that. I've also done, I suppose, spent a bit of time last year before, trying to get the tax office to come up with a reasonable reporting process for self-managed super funds for the new balance cap, because what they wanted to do originally was just ridiculous. We've now got a process that sort of works. It's not perfect, but it's better than nothing. And they've still got a lot of work to do on their end, really, more than us. So I was involved in getting that to a point where we got quarterly reporting instead of monthly reporting. We got it at the right periods. We eliminated small balances that were never going to hit the cap anyway. So we got things to a point where it was more reasonable for our clients. So I'm happy to go in and bat for stuff like that. We also did a lot of stuff around the last election with all the changes that the Labor Party wanted to bring in, scrapping franking credit refunds and a whole lot of stuff like that. So we did a lot of work around that as well, a lot of mail outs, a lot of things with clients, a lot of things explaining to clients how this affects them, and why it's not a good idea. Look, I don't know if we had any effect at all in what we did, but certainly the election ended up going a different way from the way everyone thought that it would.
Yeah, that was an interesting, certainly an interesting period of time with the 2019 election.
Mm. Oh,
Um,
look, well, I think probably the thing that I would say and that people would say about me is I'm in business to help my clients. I'm not in business necessarily to make friends with all the regulators and everybody else. So I'll tell them how it is. If they don't like it, they can rebut what I say, but I'm not. I'll argue on facts and I'll argue on ideas, but I'm not going to just accept things for the sake of them being accepted.
Yeah, that is an important element of contestability of a of a regulatory environment where regulators won't always get it right. They just happen to be regulators, right?
Correct.
That doesn't mean that um, they're not always going to be correct, as people have occasionally assumed. Because most of the judgments, for example, with a regulator like ASIC would make on accounting issues, uh, haven't yet haven't hit a court if there's a dispute between ASIC and a company.
Yeah.
Uh, it'll usually be the company that faults, so things don't necessarily get tested. Um,
People don't like to take on the regulators, and it appears to me that many of the organisations within the accounting industry, financial services industry, would are not prepared to get out there and say what their members think. They're too busy to appease the regulators because they want to stay friends with them. Well, look, that's not my business. I'm not in business to be friends with regulators. So if the regulators are doing things that I think are dumb, I'm going to tell them. They can like it or they cannot like it, but I'm certainly going to tell them. And I'm pretty sure they read it because we certainly hear comments back from other sources that they're not happy with us about things that we've said. But look, that's life. At least someone's prepared to say it.
uh,
Whereas
can
a lot of people
you,
aren't.
well, you've said something interesting there, and might want to just tease it out some more,
Sure.
um, because over my career, I've been employed by two professional organisations, um, and one of the things that I've noticed is that from time to time, members are unhappy with a position advocated by the body,
and, and often
or the fact.
often because the body has never asked the members what they want. The professional staff at the body, many of whom have got no experience in the real world, keep making decisions and advocating for things without talking to the members about it.
So, do you think members are paying money to professional bodies um, who then don't actually enfranchise them by asking them what they think or what their real experience is?
I think that happens in a lot of. Well, I know that happens in a lot of cases. The professional bodies just don't ask their members. Now they'll say, "Oh, this is what the members think," but they won't really have ever asked them. And we've seen that so much over the past couple of years. The whole thing. If you remember around the election in 2019, there was a whole thing around accounting fees, and the accounting bodies were so slow to come out with a response to that. When Shorten said he's going to limit them to what, $500 or something. If I was a professional body, I would have been out there the next day supporting my members, suggesting how ridiculous this was. But no, it dragged and dragged, and eventually, the week before the election, we got some pronouncements from the accounting organisations that they didn't think it was a really good idea. And we'd already been out there saying this for 3 weeks, 4 weeks, 5 weeks beforehand, getting it into people's heads that it wasn't a good idea and it was going to dramatically affect small business in this country, because they need their professional advisors and they need to get a tax deduction for what they're paying for them, because most good advisors don't come cheap. There's a lot of things like that. There's a lot of times, and I've been incredibly disappointed. I really get the impression at times that the professional associations, the people that are working there, are only really interested in their own career progression rather than that of the members of the organisation they're supposed to be working for.
It's interesting when you put it that way because there are times when there is a limited pool of consultation. It might be with a centre of excellence or something, but um, it really does depend. Sometimes it depends on the topic. But the fact is, the members who pay the fees perceive that nobody's listening to them
Correct.
in certain situations, um, and that over time creates a problem. The other issue, the other issue for the membership is this: the barrier to entry is pretty high for people. They've got to have qualifications. In some cases, they will have had to have practical experience, and then once they walk into a professional body, they need to actually do another qualification to get the top shelf designation.
Correct.
So they will be reluctant to ditch the designation
Correct.
on
There
on
are a lot of people with chartered accounting qualifications who may not necessarily use them that much, who would dump them tomorrow morning if they could keep the letters CA after their name or FCA after their name, because the value that they get from the organisation is negligible. Although I will say the fees have come down, but that's nice. The fees have come down, and now the organisation makes a loss, or it used to make a profit, and they've blown hundreds of thousands of dollars in members' funds on rubbish. But I don't think the professional organisations actually perceive the level of discontent that is out there, and it is huge. And I speak to so many, especially CAs, they're just unimpressed. And the CPAs obviously have gone through a very interesting period with their own show pony and all the rubbish that happened around that, and how the CPA board allowed that to happen is really quite beyond me.
um, it, you said before that you've occasionally ruffled feathers with regulators.
Yes.
One of the more uh, I think if we explore this issue in a bit more detail, because I think it's important. Um, One of the more provocative things you've said is that the amount people need to spend on an annual basis to manage an SMSF has been grossly overstated.
Yes.
Um, there are several reasons why that's interesting. Firstly, if something is overstated and it's said by a regulator, um, people may be afraid of entering into the SMSF space.
Correct.
Um, what do you really? What is the real number that you notice from the marketplace in terms of managing funds?
Well, we did a media release on this a few weeks ago, just to try and really get something reasonable about around the amounts, and we based it all on the figures that we got from the tax office for 2018 data, because 2019 is too soon. And while ASIC had on their flyer that it cost $13,900, the average cost of running a fund, it was just rubbish, because that average cost, they included interest, they included insurance, they included some expenses that should be in there, the cost of running the fund, they include investment expenses, they include forestry managed investments, and something called other deductions. I've got no idea what's in that in any case. So when you actually pull it out and have a look what the real cost of running a fund is, if we look at the median over all of funds, it's about $3,300 from an admin perspective. So that includes the auditor fee, the admin, the accounting and tax work, and the levy. It comes out about $3,300 for a small fund. It comes out about $1,600. So those are funds that are with assets of less than $50,000. So that's 1.6%. It's not as small as you'd like it, but it's certainly nowhere near the 13,900 that they're talking about. We also found that funds that with between 1 and 2 million, the average fees they were paying for admin and probably included some investment advice is about $4,000 a year. So that's 0.4%, which I think makes it cheaper than anything else to run. Oh, it depends. If you've got 2 million, it's 0.2%. So there was just silly. I thought if I'd put out the same information that ASIC did, um, I'm sure someone would have taken me to court and told me it was false and misleading, and been able to take action against me. And ASIC would have been jumping on top of me, telling me, take it down, take it down, take it down, because it would have been false and misleading. But because they're the regulator, um, you know, the only people that tell them is somebody who's got the guts to get up and say, well, look, we think you're wrong.
Yeah, it's difficult when you're up again. It's difficult when you sort of sit there in your position and you look at that comment and then you see what goes on in the marketplace, because the market activity can be skewed, can't it?
Oh, very much so. Look, this whole thing of saying you need $500,000 for self-managed super funds rubbish. And in fact, it's quite interesting because it depends on so many factors as to what the minimum is for starting a fund. If you're starting a fund in year one and you've got maybe set $50,000 in super and you roll that into your fund, everyone will say, "Oh, you've got too little in your fund. How can you make any money out of it?" Well, year two, Mr. and Mrs. each put in 25 grand, suddenly got 100 grand in there. They buy a property for $250,000, suddenly and borrow the rest. Suddenly the fund has a lot of assets. Suddenly the fund is no longer a $50,000 fund. And they might be in their mid 40s, and that might be a really good strategy for them.
Yeah.
So it's so there's no right figure or wrong figure. It's all dependent on the person's position, their age, their super balances. There's so many factors, and coming out with blanket statements is just, I think, wrong. The ATO has given us a lot more data this year that we can see different sizes of funds. But what we still don't know is how many really, I suppose, is to be able to compare what we've now got with the next year and the year after to see what the ages and average ages of people in funds are, and where funds move from a category where they're a $50,000 fund to a $250,000 fund. And I don't think the ATO really tracks that in any case, and we can't track it. So there's no. What I'm saying, I suppose, is there's just no rules. There's no fixed rule that says it should be this or it should be that.
Are there any other sort of issues that are bubbling beneath the surface? Because the one you've touched on has a significant bearing on people understanding whether they're able to or should consider an SMSF.
Yeah.
Um,
Look, the other major issue, and there is some movement and things going on about it, is whether you need to have a financial services license, an AFSL, to provide advice to a self-managed super fund. Now, I'm not talking about financial advice for specific products because I don't think people want to do that. But if we go back prior to the current legislation to when we had the accountant's exemption, which if people don't know is gone thanks to Bill Shorten, Bill Shorten and the accounting organisations not getting really opposing what was going on. We need to get back to a position where accountants can talk about the stuff around self-managed super. They can talk about establishment, talk about contributions, pensions, and winding up a fund. And that is
are
not.
you okay? Let's. Are you arguing in favour of what used to be known back in the day? One of the first stories I ever wrote dealing with the accounting profession was a thing called incidental advice.
Well, it's incidental advice, but it comes back to what really what we had under the accountant's exemption, which gave accountants the ability to talk about these things. I'm not suggesting accountants should be giving investment advice unless they're licensed to do so. They can certainly give strategic advice. And they're probably better at doing that than anybody else. Plus, the other thing is they're the most trusted advisor. So why would you cut the most trusted advisor out of a role where they can really be helpful to their clients? And that's what the changes to the corporations law did back 4 or 5 years ago now. And again, the accounting organisations were not strong enough to stop that happening, and they should have been. And now we've got now we're going through all this current stuff. The regulators now said, oh, no, accountants can now give advice. Well, why was it okay for them to give advice now, but wasn't okay for them to give advice before COVID-19?
Uh-huh.
How
Yeah.
does that make any sense? They're either competent to give the advice or they're not competent to give the advice. They haven't
Mm.
suddenly become competent to give the advice. So it really just shows that the whole system is flawed. And look, and that goes in some respects into financial services. And something we've also talked about a bit is this: the fact that to do a statement of advice has to be 40 or 50 pages and cost $4,000 or $5,000 or $3,000 or $4,000, when really for a few $100s, you should be able to give somebody some good strategic and even product advice in two pieces of paper rather than 50 pieces of paper. And why we've gone to this cover our ass at every opportunity statement of advice really just amazes me, because it's done the exact opposite of what the government wanted. It wanted more people to get advice. Now less people are getting advice because it's too expensive.
Now, the vibe you're probably, and I take it that the vibe that you're getting from people who are your customers, people who use your products, is that it's just too difficult for them to have the conversation with the client right now.
Oh, look, I think a lot of them have the conversation, and then they write a file note that says, "Client came to me and asked for a self-managed super fund." I don't think that what accountants are doing has probably changed very much. It's just the way that it's delivered has changed, so that they keep themselves within the law, hopefully.
Yeah, that's actually quite interesting. Now, Ron, the you've got a lot to say, and I know the BGL blog has certainly got a lot of material on it, which some people might want to go and read when they hear what you've just had a chat to me about. Where do they find that material, and how do they get in touch with you?
Oh, look, it's simply www.bglcorp.com.au. That's our website. All of our stuff for the blog is on there, or
Yep.
through LinkedIn. There's a lot. I've got a lot of material on LinkedIn as well. Most of the stuff that's on the blog also ends up on LinkedIn.
Uh-huh. So it's www.bglcorp.com.au, and you'd be able to find Ron Lesh somewhere on LinkedIn.
Yeah,
Lesh
just
spelt
search me on.
Lesh.
Yep.
And that's actually a good place to start if you want to know more about Ron and the views he's got on a range of issues. We've only touched the surface over the past 25 or so minutes. Ron, thanks for making time to join me today,
Pleasure, Tom.
and look forward to chatting to you again. And for the listeners of the podcast, stay safe, look after each other, and I'll be back with another podcast in the next little while.